Well, g'day there, everybody. Thanks a lot for joining me on this Friday afternoon market recap. It has been quite a volatile week, as you are all very well aware of. It has been really a week of semi-relief for myself. I have been speaking about a possible market correction for a number of weeks. We have been registering some very severe technical breakdowns, especially on the Russell 2000 for quite some time. Also, a lot of divergent signals setting up across the board on the Dow Jones Industrial Average, the Nasdaq, and to a lesser extent the S&P 500. We have been, of course, flirting with a bunch of intermediate bullish sort of uptrends as well, and it was looking as though we were going to inevitably break this. It did take a little bit longer, again, than ideally we would want to see something like this actually play out. It had a lot of people semi-confused about the state of the market. However, over the past week, we have seen a technical break. We have seen all three of the closely followed US markets really take a belting this week. The Nasdaq, the Dow, and the S&P 500. If you go back through our catalog also, very importantly, we did begin to pick up on the Russell 2000 on this particular candlestick just here, which has really contributed to, or at least really been the impetus for, the technical break of this intermediate trend line to the upside, and also, the continued sell-off that we have seen more or less all the way through to the close as at today's session. Now, as I said, this video now is going to be a recap of what has taken place. A lot of people in that pro analysis class have made some absolutely phenomenal returns. That is what I'm going to speak about now. I did want to point out that I am going to be sitting down within the next 24 hours and recording this weekend's pro analysis class, and what we'll be doing is recapping in more detail the US markets, followed by trade setups moving into the upcoming week's worth of trade. Now, the week that we have seen, it has been really just incredibly profitable. I'm not going to go into the percentage returns, but you are going to see some of the trades that we have been setting at least contingency orders up on, and you can see the results of that. If you're looking to learn more about how to actually understand, interpret market detail, and then place confirmational trades depending on certain criteria, I would encourage you to look into that pro analysis class. If anything, it stopped you over the past number of weeks from actually jumping into any bullish trades. And at the same time, although you have had to be a little bit patient and disciplined, it has also justified and got you into a lot of bearish trades over the past 3 days, the second half of the week just gone. So again, the link is in the description for those of you learning how to trade. I would encourage you to have a look into that analysis class. It's something that I do each and every Saturday. It is recorded and it is kept up online. So with that being said, let's jump into the Dow Jones Industrial Average. You can see here, really, if I just go to the weekly chart, you can just see the magnitude of this sell-off. We were down over 1,100 points on the weekly candlestick, but what is even more impressive is not only just our entry here at 26,203, but also where X marks the spot on my screen. And essentially what X marks the spot means is support, i.e. our target as to where we expect this market to hold if we're going to see the continuation of the larger bullish macro uptrend. Now, as at the current close, not only on Friday, but also on Thursday, we're starting to build a series of lower wicks, and they're coming in very close to these rising, or this confluence area of support. I'm trying to bring this into perspective. So this is a really positive and healthy sort of outcome or construction for the Dow Jones Industrial Average towards the back end of the week just gone. The sentiment obviously is exceptionally bearish. There are a lot of traders out there who are relatively fearful, but at the same time, this is a very logical area as to where the markets may stop. If I go into the Dow Jones, into the S&P 500, the interesting thing here is that according to my chart here, we do have a little bit further to fall. So my target on this is down more so close to 2,670. You can see this horizontal line. In the past, we have built a lot of traction both as support and resistance, and at the moment, we are essentially in absolutely no man's land, really. We're struggling to hold, or at least we are holding around that 200 simple moving average, but we can see, of course, these markets overshoot these very long-term sort of critical areas of support, and as such, I really wouldn't be gravitating around this area as support as we move into the week's worth of trade next week. Now, again, very similar to what I spoke about on the industrial average, this is the chart of the Nasdaq. The Nasdaq is at a logical area. It did actually hit our target on Wednesday. You can see the short trade here. This was sort of the first entry, or at least the first major market entry after the Russell 2000 to really confirm where the S&P and the Dow Jones Industrial Average may move to. Now, again, in full disclosure, we didn't necessarily have these Q trades open at 7849. It did act as a proxy of immediate weakness if we saw the NASDAQ follow the Russell 2000. Now, again, if you go back to this candlestick just here, this takes us back to Friday's session worth of trade, the first Friday in the month of October. So it was really 2 weeks ago now where we really began to flinch and close below this level. So it was a lot, it was a lot earlier than what the Dow and the S&P did similarly. Now, as you can see, we hit our target down here. We hit it, as I said, on Wednesday at 7,520, very similar to the S&P 500. We are holding up very close to the rising 200 simple moving average. But what is more important than the rising 200 simple moving average right now is this long-term sort of intermediate trend line just here. Because if you extend this up, and I know there's a lot of lines on my chart, this is all past analysis that we have been performing on the markets. But again, it's no surprise really that we've tagged intrasession on the weekly chart back down to this rising area of support. So what this is telling me is that, look, although the NASDAQ itself is down very close to 300 points on the weekly, we may have actually put in the low or very close to the low of this first wave of selling pressure. You have to pay attention to this intermediate decelerating fan line now that we have broken this decelerating fan line a little bit higher. So you can see it's coming in here around 7,310. If we can continue to hold above this area, okay, I'm going to draw little arrows here to the north of this green line on my chart. The same with the S&P 5, the Dow Jones Industrial Average. It opens up the portal, or it opens up the doorway to actually take out the swing highs over here above 8,137. And I do believe on the macro outlook, we do have a little bit of gas in the tank for this market to continue further into 2019. I do not believe that we have established a market peak at the moment. This again is the cyclicality of the markets. We have been extremely overbought. We have been in this prolonged sort of move to close those open windows, taking us all the way back to the beginning of the calendar year of 2018 when we established that waterfall sell-off. All right, we have closed those open windows across the board collectively now. More importantly, over here on the Dow Jones Industrial Average and also on the S&P 500, these windows have been closed. And now what we're going to do is base ultimately and then make a bullish pop. Okay, that bullish pop, it may take a little bit of time to really carve out that support area that I'm just mapping out to you now, which is going to ultimately take us back up above these swing highs over here. All right. But I am going to speak about that in more detail in Pro. Again, I would really encourage you to have a look into that. Let's go through our top 12 individual trade list. The one trade, by the way, and it is the first stock on our list, is Apple. Didn't really move. I mean, we had the contingent order at 214. It hasn't flinched. This is holding up a lot better than every single other stock in our top 12 list. But at the same time, we still have potentially either a double top under construction or potentially that of a triple top. And we do have a defined neckline, essentially where we closed that on Thursday prior to this little relief bounce that occurred during today's session on Friday. But with that being said, let's just go through some of these stocks. Again, Amazon was a fantastic outcome this week, short at 1,885, a secondary entry. This was 1,856. By the way, green are entries, orange are targets, okay? And the target was 1,750. We tagged that, we actually overshot that on Thursday. So a massive profit here on Amazon that played out in the space of 2, 3, at most 4 days. We've got Boeing Airlines, which is more or less unchanged at our bearish entry at 360.46. I'm still liking this, but we do have earnings upcoming. All right, we've got Baidu again. No trade on this last week. Very similar to one other stock in the list that we'll rotate to. But this is where the fun and games really begin. We have Caterpillar short below 151.49 and again a secondary entry at 149.60. Hit our target at 140.52. Very similar to the Amazon type of trade setup. Really like it. Similar to Boeing Airlines, except Boeing Airlines at the moment, it hasn't really moved all that much, but I'm still anticipating a big, or at least a relatively speaking, a large move to the downside. We've got COP holding up more or less very close to our target, or sorry, our entry at 73.53. Not a whole lot to report on there. With COP, we've got CVX cracking below 121.25. It continued during today's session. We almost hit our target at 115.64. So some pretty decent profits there on CVX. We have Google. I reported on this yesterday. We actually hit our target on Thursday at 1,079 after two entries, one at 1,147, okay, and another at 1,172. I'm not going to go into the monetary returns or even the percentage returns. Again, for those familiar with options, and if you're familiar with swing trading options and swing trading in the money options, okay, you'll just, I mean, very quickly you can understand just how profitable those positions have been. Have a look at IBM. This has been one of my favorite trades. 147 was the short entry after the resistance tag up here at 150. We're back down at 140. 45. This is a very fast, about $7 on this trade. Very happy with the outcome of this. And again, it just comes into the patience of waiting for this to really just peak and then reverse suddenly if we saw the market reversal set up, which we did towards the midpoint of the week just gone. We have Netflix that was down. It was over 10% on Wednesday. However, we didn't have a trade. Very similar to the analysis that we came to on Baidu. We say, yeah, we could see a little bit of a sort of a temporary sell-off, but at the same time, there's not a nice risk and reward sort of trade. And by the way, if you see a dashed line, it means that it's not a definitive trade for myself. So, I mean, there was no trade on Baidu, and the same for Netflix, even though we did close lower as to where we began the week. It's no surprise seeing the markets as weak as what they are. And then to conclude with, we have Tesla, which is just largely unchanged. If I go to the weekly chart, we closed down $3.17, but we really didn't crack this support area, which I still think is ultimately going to be cracked. It just hasn't happened yet. So again, a really busy week just gone, and it has sort of more or less offset and compensated us for a couple of quiet weeks that we have had to sit through, especially during the month of September. I mean, personally, again, I just haven't really believed in this sort of market bounce off from this retest. I was speaking outward very openly about how a lot of people, again, are identifying the 123 back test after a new all-time high, but they're failing to pick up on other signals. I can say confidently that we've just been smacking this market, the market analysis, and the majority of our individual trades out of the ballpark. And this is just really surmising our strategy, really, when we break down the markets, really selectively entering and exiting when we feel, when we feel the right time is to do such a thing. And, it's really compensating the majority of people in that class. I'm very happy about the outcome of the week just gone and the analysis that we have had on the market over the past number of weeks, if not a couple of months now. So again, encourage you to have a look into that pro analysis class. It will be up over the next or within the next really 12 to 24 hours. And if you have any questions, email me success@pivotpoint-trading.com. Until next time, everybody, enjoy your weekend, and I'll be back with you next week for some more market recaps. Farewell.